Hey, welcome stackers. This is Jose and I'm with,
Hi, I'm Eric.
and we're here to talk about should you invest in gold in your investment portfolio?
Right, love it.
Yeah. So we have a couple of gold coins and bars up in front, just so you know what it looks like. We could start with gold as a safe haven, and what you think about gold being as a pro for storing as a safe haven.
Yeah.
Basically.
So, amazing thing about gold, of course, is that it's literally been used as a currency, as a safe haven, as a store of value for 5,000 years. It's really just the most unique, most incredible asset that's probably ever existed. But why gold really works as a safe haven is that when things go bad, when things go really bad, people turn to gold. And you can kind of see it when you see the price of gold tend to spike during times of calamity. People go back to what they trust and know. If you look at what happened, for example, during COVID or during the 2008 stock market crash, gold remained very resilient and came back very quick, much quicker than equities or other types of financial assets. Also, when you're in times of turbulence in the world, right, things happening in Ukraine or things happening in Israel or all the different flare-ups that are happening, all of those things create insecurity in our financial institutions. That's, again, when people turn to gold. So gold has been, is now, and will forever be a safe haven asset for people to effectively store their wealth.
And would you have an opinion as to why has gold been so popular over 5,000 years? Like our ancestors and our ancestors' ancestors. And
Yeah, well,
what is it DNA? Is it in our DNA to
yeah,
love
I
gold?
think it is a little bit in our DNA, whether it's used in jewelry or things like that. It means a lot to us from a kind of ceremonial standpoint. But it's this element that never oxidizes, right? You can throw it in the ocean and 2,000 years later, dig it up, clean it, and it's good to go. You can melt it and turn it into anything you'd like. So it's just this, it's an incredibly, incredibly unique asset that has truly stood the test of time.
Yeah. Okay. And what about when it comes to the tangible value versus the digital assets that currently exist in the market? Like why go for physical gold?
Yeah. So, there's a lot of ways to buy assets. And when people think in terms of tangible versus, say, a digital asset, often what you're talking about are things you can invest via markets like the stock market, right? So you can certainly buy equities, you can buy bonds, you can buy crypto, for example, via these markets. But you can also buy ETFs, and ETFs are investments that will buy a particular type of product. So you could buy ETFs on gold or ETFs on silver. Those are not physical assets. Those are tangible assets. And they introduce a lot of other characteristics that are not inherent in owning physical gold. For example, things like counterparty risk. You can buy an ETF that's supposedly investing in gold. What they're probably and most likely doing is they're buying futures contracts that hopefully will pay in gold, as opposed to owning the physical assets, something you own, you track. It's in a way, it's away from the government, it's away from banks, it's away from other financial institutions, and it's yours. It's something you can take with you. You can move all over the world. It always is liquid. It's always credible in any market, anywhere in the world. And in terms of a physical asset, it kind of crosses the line between what could be a paper asset, but also something that, being hard, it almost serves as more than just a hard asset. It almost is a protective asset, right? It's that one asset you can store away and always know that it's going to be good and grow with you through time.
The first thing that comes to mind as you're talking about this is just cryptocurrencies, just being digital versus gold, and just having it physical. There was a story that came out at the time of this recording of a man who lost his USB in a landfill
Right.
And supposedly it had like 1,000 Bitcoins at
Yeah.
today's value is like $700 million.
Right.
And like he can't get access to it.
Yeah, I
because
saw
he
it.
accidentally threw away a little piece of USB.
Right, right. So there's two issues with that. One is it requires a counterparty. You have to have all the other Bitcoin miners out there validating the transaction. What if you're not on a network? You know, what if you're just completely away from a network? You have no way to validate or get access to your Bitcoin. And in that case, the guy lost it. He even tried to get the government to allow him to completely like tear the landfill apart to find it. It's obviously worth a lot of money. Didn't happen. So that's a clear case of a real risk with a digital asset.
So we're busy here in the warehouse and everything, and so all the shippers are coming in and out while we're recording.
Yeah.
That might be why you might see a cut over here. So going back to the topic on the digital assets, you were talking about like cryptocurrencies, and more specifically, what happens if a network is down? You don't have access to it, or the USB gets lost. Now your wallet is gone.
Yeah, or it gets hacked. I mean,
gets hacked,
with
which
all
is-
the things going on in quantum computing and things like that. Can you imagine if it ever got hacked? It's effectively worth zero at that point.
At least owning gold, someone has to break into your home, and I don't know about you, but there's a lot of dangers breaking into someone's house when you have gold.
Yeah, I think the difference with gold is it's a very easy asset to hide,
Yeah.
if you will. And of course, we offer professional vaulting, which is insured, and managed in a way where the customer can be very, very comfortable that it's safe forever.
And the other aspect is when you're owning gold, you don't compromise on the security of owning it because there's no counterparty risk as well.
That's correct, yeah.
So the banks,
There is no one to,
it's yours.
you're relying on another party or person to get the value out of your asset.
Okay. So gold, one thing that you'll always hear, and I always hear it on news over and over again ever since I was little, is gold is a great investment to go and protect yourself against inflation.
Yes. Gold has forever been an inflation hedge. As governments continue to print money, they're effectively reducing the value of the government assets itself. And so the effect of inflation is very, very negative for our purchasing power, where gold in itself maintains its purchasing power relative typically any fiat or paper currency. An example would be if you went back into like the 20s and you had like 10 kilograms of gold, you could buy like the median priced home. If you come today, you had 10 kilograms of gold, you could buy even better, a very, very nice home today. But the 10 kilograms of gold would have cost you about $6,000, say in the 20s, where today that 10 kilograms of gold would cost you, shy of $1 million. So think of it in this terms. What would my $6,000 buy me today if I'd kept it in $6,000 fiat currency versus if I'd converted it to gold?
So that makes me bring two questions. One is, can you explain it like I'm 5? What is inflation? Like, because inflation is being used a lot, and we're saying we're hedging against inflation, but then
Yeah, so inflation is the destruction of your purchasing power. It means it costs more money to buy the same commodity. So if you have more and more of fiat currency, the value of that currency goes down, down, down. And as a result, hard assets, real estate, gold, things like that go up because you can't produce effectively more of them. It's much, much harder to produce than simply calling up the Federal Reserve and saying print, which is effectively what they've been doing. It's why our government right now has the highest debt it's ever had, and why assets, hard assets such as gold, protective assets, are going up in value. And quite frankly, it's not dependent on a political party. That has been happening with both parties. They continue to produce debt, and that debt is very detrimental to our purchasing power as individuals going forward.
Thank you for that, because we tend to talk about some of these technical words, and just want to make sure everyone as a viewer understands why we're saying gold is great against inflation. And also, gold is considered something that you should put into a diversified portfolio. So
Yeah, I think, we
necessarily
sell
going on
physical gold and silver, and you'd think we're going to say, take all your money and buy gold and silver. I'm not going to tell you that. In fact, I think you should not do that. What I do think you should do is diversify, where gold is a part of your portfolio. Typically, the recommendations are anywhere from 2 to 10%, depending on where you are in your financial journey. However, when you take a look at models, things like in the stock market we call like the efficient frontier, it's like just kind of simply described, it's like, if I'm willing to take this much risk, then what should I invest in to achieve that goal? And so that's called the efficient frontier. So the higher the risk, it changes the asset allocation, the things you should be invested in to get that return for that amount of risk. In all of those scenarios, gold always enhances the value of your portfolio, whether you're in stocks, whether you're in crypto, whether you're in real estate, or whether you're in a combination of all of them. Gold always makes sense, always enhances the risk return of any portfolio going forward in time, and has for many, many, many millennia. So gold is a tremendous benefit in terms of people trying to diversify a stock portfolio, a bond portfolio, an investment portfolio, which includes all of the other asset classes.
Cooper, when you get a chance, on the description or somewhere on the video, please do add what the statistics are in terms of how many people actually diversify into gold, because you mentioned the 2 to 10% range. I'm willing to bet that's less than 1% for average household.
I think most households have none, and the ones that do have far less than 1%. Yeah. So there's a lot of upside, which of course will create demand in the gold market, thus lifting prices higher as people come to realize its real benefit as a store of value and a protection against your purchasing power.
So there, when it comes to gold, there's a lot of pros, but then we should talk about the skepticism of gold.
Mm-hmm.
Like, why should I have gold? I mean, I could just do ETF. I could do stock market. I could just buy real estate. There's so many different things. Like, someone's going to steal it from me. I'm going to get broken. Or when I buy it, it's hard for me to get it because it's going to get stolen in the shipment. I don't know. You could just place any different things in there. What are the typical things that people are skeptical about when buying gold?
Yeah, so I would start by saying, there is no asset with no risk. All assets have risk. Gold itself has an exceptionally low risk compared to other assets. When you talk about the utility of gold, about 50% of gold is used in jewelry. About 20% is purchased by central banks. Again, smart money moving into gold right now as a protection against what they're seeing happening in the world, whether it's in currency devaluation, whether it's in wars, whether it's in calamity, hurricanes, earthquakes, fires, things like that. Gold has a real place in protecting assets. In terms of the counterparty risk, there's none. In terms of theft and things like that, that's a real issue that needs to be addressed, but it's addressable. So you can certainly store your assets. You can vault it in very secure vaults around the world. You can vault it with us. We'll protect it, insure it, humidity control it, have it 24-hour, surveilled. It's very, very safe and guaranteed. So you can eliminate most of the downside risk. I'd say another downside risk with gold is that it doesn't pay a dividend. It's not a, quote, working asset in that sense. Like, you don't buy a stock and it pays you, Apple 1% or so a year in a dividend, or a real estate holding or something like that. The other side of that, though, is it doesn't come with the taxes that are associated with those things, right? So if you own real estate, you're paying real estate tax. You're paying to maintain the property. You've got all these other, things that are happening to the asset that cause it to be worth less and less over time. A house today, 20 years from now, that house is likely worth less from a building standpoint. The asset may have grown in value as the real estate and the markets devalued currencies and things like that. It has a real place, pays a dividend and all that. but gold protects it. Gold is that place you go to store value. It's the place to secure a certain part of your portfolio and to balance all those other assets against what's happening in the world in real time. So I think it's a tremendous asset that everyone should own in some quantity in their portfolio at large. But it's not the one-all, end-all of all investing. So we don't recommend you put, even the majority of your assets in gold or silver. We recommend somewhere in the 2 to 10%. We advise you go talk to your financial advisor, of course. But we do think that it is proven in a well-diversified portfolio to have absolute standing, to make perfect sense.
That resonates a lot, especially when it comes to owning a home. There's the hidden costs. Yeah, you could say they appreciated by 5-10% a year, but then what about all the taxes that went in? Your labor, the sweat, the heartaches, the insurance. It goes on and on.
That's right.
Whereas gold, it sits there.
Yeah, I mean, you look at people who've suffered hurricanes or fires or earthquakes. They've seen many of their assets go to zero. We just have experienced that here with the LA fires. Many of those people were uninsured. Their assets gone, literally gone. So, when you compare it to other assets like, say, stocks or real estate or things like that, stocks are a great investment and I think should be in every portfolio, maybe even the majority of every portfolio. But to balance the fact that you have crashes like in 2008 and one, many are thinking is coming soon just because we haven't had one in many, many years and markets tend to correct, that's where gold can really counterbalance the effects of those portfolios moving so violently up and down. And real estate is a funny one because people always forget it's a real estate market. They only say real estate, but it is a market, which means it too can crash, which it has done in recent times. That's why you saw the big investment groups after those crashes going in to places like Phoenix and other places around the country and buying up all the single family homes because they became super, super cheap. And again, gold serves as that stable, secure, physical asset without counterparty risk that you can store away and know that it's there for the rainy day.
That's fantastic because I was about to touch on the point. Can we do a comparison on stocks and real estate? But we covered that.
Yeah.
Then let's talk about the collapse of currencies. For me, at my age, I haven't experienced the collapse of the
But that's also because you live in the
anything.
United States.
Yeah, that too. So
but in America,
I have no idea what that feels like.
Right. So, I mean, right now, the debt situation is more than $100,000 for every citizen of America, right? There's the real quick way to resolve that debt is to print money really fast and just pay it off. Yeah. So what does that do to the thing? It hyperinflates the currency. If you lived in a country like Zimbabwe or Venezuela or Argentina or Brazil or other country or Germany, after the war where you had massive hyperinflation, the fiat currency wasn't worth its paper value. Forget what was printed on it. But gold always was, always is, and always will. So gold serves that purpose of protecting you against currency collapse in addition to all the other calamities that are happening out in the world.
Why do you think in the educational system some of this information is not really taught? For example, when I was growing up in high school, the only introduction to inflation or hyperinflation that was introduced to us was how World War II started with Germany and their hyperinflation in the early 1900s. But beyond that, I felt like the education system never taught us more about
I mean,
and like a way to counteract it.
Yeah,
such as gold.
I think it's a standard part of economics, but I mean, most high schools don't teach you how to balance a checkbook, right?
That's true.
I don't think you should really be expecting them to teach you how to adequately diversify a portfolio per se. Unless you're taking a class in that, then they absolutely should, and gold should be a topic in that discussion.
So you heard it from us, everyone. We're teaching you what high schools couldn't teach you.
Yeah.
Counterparty risks and physical ownership. So we did touch on physical ownership a little bit and a little bit on the counterparty risks. Let's expand on it a little bit. what exactly does counterparty risk mean, and what is it in the context of like owning it as an ETF, gold ETF?
Yeah. So first off, when someone buys an ETF, that comes with management fees, right? When you buy the gold, you take it home. There's no fees. You know, if you want to store it, there's some fees, but it's less than the management fees of an ETF. You've got to pay portfolio managers. You've got to pay people who are, you know, on Wall Street, living with Wall Street salaries and having to maintain that livelihood. With an ETF, you don't actually own the physical asset. Again, you own futures contracts, which you hope will deliver. If you look at things like COMEX or the Forex or different markets that are out there, you find that they often are short a particular physical asset far beyond how much of that asset even exists in the world. So they physically can't deliver that asset should a real calamity happen, and they need to deliver it. Beyond that, they often will not only take that, but they'll often lend against a particular position. So they're extending your asset to someone else and getting paid extra for it, of which you're getting none of that income either. So there's a lot of counterparty things that are happening behind the scenes that kind of aren't right, and they're certainly not protecting you for the real reason you want to own physical gold and silver, as an example. The other is with digital gold. So you have a very similar scenario where in crypto you can buy a gold token. It's exactly the same effectively as an ETF, where you don't actually own the physical gold. It's not segregated. It's not in your name. It's not your asset. It's a combined asset that's subject to a blotter or some other type of accounting to prove that it's yours. If those institutions go down, lose their records, hacked, all the different things that can happen with that, your asset no longer exists. You can't prove you own it. And even if you do own it, you can't get physical possession of it to do something with it. So gold solves all of those problems and does it in an incredibly efficient way.
It's known by everyone and accepted by almost everyone around the globe. The storage. So now we're saying, well, we understood the counterparty risks. Now, let's say we now own it and we want to store it ourselves. How does that look, and what are the typical risks and benefits?
So I think the storage of physical gold is one of the questions, and we've kind of addressed this on a few videos, so I'll just tap that real closely. Typically for the stacker community, which often is buying gold and silver, those type of communities typically want to take possession. If I don't hold it, I don't own it. That's kind of the mindset, right? And they'll typically hide it somewhere in a hide drawer in their home, or they'll put it in a safe in their home, or they'll bury it in the backyard. You know, there's a myriads of ways you can take an asset and kind of make it disappear to the world. I think all those are fine ways of doing things like that. The problem is they're not insured. They can be forgotten. They can be lost, and they can be damaged by weather or fire or things like that. Professional storage is different. It's stored in vaults that are fire protected. It's insured up to the full spot value or the asset value in any given point in time, not, for example, like an insurance policy, what'd you pay for it? Well, what if gold's doubled in value? You get half back. In our case, we're insuring against the actual replacement value of the asset in our vaults. So you've got 24-hour surveillance, you've got humidity control, you've got protection of the asset, you've got all kinds of camera and other types of surveillance there, and then the insurance to completely back it up. So I think a lot of people should store a kind of a rainy day amount of these physical assets in their own dwellings. I think beyond that, they should seriously take a look at vaulting those things with like Summit Metals to have those assets protected for a very, very long time.
And do you have an opinion as to like when is the right time to vault? Like when should a person seriously consider this? Is there a right time?
Yeah, I mean, to me, I would say just being conservative. Let's say that the old rainy day, have 6 months of cash or things like that. I'd probably, if you looked at your expenses and things like that, I'd probably keep at least 6 months of that in physical assets as well. But I'd probably take the rest and I'd vault it for its own security.
Oh, okay. So another aspect is, let's talk about the supply. Like,
Yeah.
gold is rare. That's what is told to us. It's
Yeah.
rare, and it's hard to find. And what about the demand that exists? Because a lot of people are now getting to understand that gold exists.
Yeah.
At least in the United States.
So here's some just things to get your head around. Gold is a very, very unique and limited asset, and it requires an enormous effort to mine it, transport it, produce it, refine it down to its pure investment grade form, which is typically 3 nines, 0.999, often 4 nines, 0.9999% pure gold. It's not alloyed typically with other metals when it's stored in like central banks and depositories and things like that. If you took all the gold in the world that's ever been produced in the history of mankind, it would fit in a 23-meter squared cube. That's about, think about that, that's 75 feet aside is all the gold that's ever been produced in the history of the world. Imagine that, with every ring, every piece of jewelry, all the gold stored in the Fort Knoxes of the world, and the central banks of every, sovereign country in the world stores gold in their banks. All of that combined is less than 75 feet squared. It's crazy. It's a truly, truly rare, unique asset. And countries are buying it in mass right now. They're clearly thinking there's danger out there. Even countries like China, Turkey, Poland, other countries right now, they're accumulating gold by the ton, not by the ounce like you and I would buy it, but by the ton. And they're doing it for all these reasons we've been describing in this video, to protect them, to protect their currency, to protect their future going forward. So it is an amazing, unique, and very, very scarce asset that can't be reproduced like a currency by calling up a banker and saying, print more. You cannot do that with gold. That's what makes it unique and an incredible inflation hedge and protection against currency devaluations.
Hopefully over time, an alchemist figures out how to make gold for us, though.
Yeah, good luck. Yeah. I've been trying that also for thousands of years, yeah.
So gold, we've been talking a lot of pros. Like, it's been, people have been using gold for over 5,000 years. It's still being used today, and there's been financial collapses, and gold has been sustainable towards this inflation. But what about the fluctuations of the gold price as it occurs? Because at current prices, we've seen it going to 2,750, then 2,600, and it moves up and down.
Yep.
By a bunch. Yep. Relative.
Well, I mean, relative to the markets that are dropping 50% in a day or two, not at all. So gold is actually an incredibly stable asset, and its movements are typically in percents, like small percents. But the bottom
that's good
line,
that you bring it up, because percents, I'm mentioning from 2,600 to 2,700.
Less than 1%.
It's $100, but it's actually 1%, whereas in the stock market, it's like, boop.
Yes, big jump. So the volatility works for you and against you, right? I mean, people own stocks because they want them to be volatile. They want them to go up a lot. People put part of that portfolio in gold because while that's doing that, they want to make sure it's protected in terms of losing beyond a certain point. So gold definitely solves that problem. But the real secret with gold, in my opinion, is to buy it periodically. So you don't come in and say, wow, gold's $2,700 an ounce. I'm going to go buy all of my holdings in gold. With my personal friends and with myself, I advise all of them to start an investment plan that includes an accumulation of gold made on a monthly basis. So you figure out kind of, where do I want to be, say, 4 years from now or 5 years from now, right? What makes up that 2 to 10% of my net worth? And then kind of divide it back. So it's 4 years, divide that number by 48, and then start making that purchase like the first of the month, every month, until you accumulate the size of asset that you really need to be protected. So you're a little bit at risk while the markets are moving and things like that from a calamity standpoint until you get to that place. But from a financial standpoint, in terms of buying the asset at prices that you can feel comfortable that 20 years from now, 30 years from now, what you paid and what it's worth now is for sure going to be worth more. It's to effectively dollar cost or periodically invest in the asset on a monthly, or at best, or I would say monthly's better, but at worst, maybe a quarterly basis.
So, with this said, it sounds to me that gold sounds more like an insurance policy for your wealth as opposed to a speculative asset. But can it also be an investment?
Oh, I think gold can absolutely be an investment. That's why it fits in all portfolios. It is a, it solves a number of different things. It's a hard asset, doesn't go away, can't be burnt, but it's also a protective asset. So it kind of serves in both sides of that equation in terms of people trying to diversify their holdings, their portfolio.
Okay. Is there anything else that you think we haven't touched upon?
Well, I would mention, there are other precious metals. There's silver, palladium, platinum, rhodium. There's a few others. Gold is the only one that is maintained and stored by central banks. It is the asset that has stood time more than any other. Silver is also a very good asset, but different in that it's far more volatile, for example, than gold. Gold is the protective asset. It's the secure asset. And in my opinion, as we get older, the proportionate amount that we're putting in precious metals, the proportionate amount should be increasing in gold as we get older, because we can't suffer the same massive drop that you might see in some other asset in your portfolio.
That's good. And we will be discussing about silver in a different video as well. So
Sure.
Like and subscribe in order to see that video.
Yeah, please. We love the comments we're getting on our channel. We love to answer them. We are really interested in any ideas and thoughts or other videos you'd like us to do.
Yeah, leave a comment below on what video you'd like us to do. We'll do it.
Absolutely. And I'd love to hear what everybody else is stacking. Tell us what you're stacking and why. We'd love to hear.
Yeah. But
all right.
that's about it.
Yeah. Thank you.
Well, happy stacking.